So I wasn't planning on making this video today, but a few of you guys have asked me, is it time to panic sell? Is another stock market crash here? And I'm going to answer all these questions for you today, or try to answer them the best I can. So fear is back in the stock market. We've not seen it in 2023. 2023 has been so far bullish, even dare I say a slight little bit of greed creeping into the market, but fear is finally back in the market. And why is fear back in the market? Well, there hasn't really been that much that has dramatically changed in the last few weeks, but what has come out is uncertainty. And what do the markets not like? They don't like uncertainty. And also from a media point of view, what do the media like? The media love fear. Fear sells more than greed. Red days get more views than green days. So from a media's point of view, they love red days, and they're not really bothered about what is the best decision right now financially for you, or is the stock market going to be okay in 12 months time. The main thing with media is get bum on seats and watch the news, and what is the way to drag you in? It's fear. Greed can do okay, but fear is the big thing to drag you in and get you watching. And it's the same on YouTube. If you go on YouTube nowadays, or in the last few days, as soon as we have a few red days, what is every single YouTuber out there doing? They're calling 2023 stock market crash. Stock market crash is coming. The stock market crash is happening. And this is from a media point of view and from a YouTube point of view. They want you to have fear, and fear sells, and you will watch fear. And that's the main thing why you're seeing so much at the moment being brought out there. And that's obviously affecting retail investors. Now, realistically, there hasn't been that much that has deteriorated in the last few days for us to have a stock market crash. People that are claiming a stock market crash don't know there's a stock market crash happening. No one knows if there's a stock market crash that's happening. But the reason why we have seen uncertainty and everyone jump on the uncertainty is this, and hopefully this is a little bit useful for you. So if you look at the stock market year today, we had a very good run, and you can see here from the S&P 500, we have nearly given back them gains. Now, obviously this is the S&P 500 that is giving back some of these gains. Funny enough, when I actually look into my investing account, some of the small caps and mid caps actually seems to be holding up okay. It seems to be a lot of the bigger stocks that seem to be getting dragged down at the moment. And if you look at the Nasdaq, for example, a lot more of the tech heavy, you can see here this is actually still holding on to a lot of the gains at the moment, and this is actually why I actually compare the Nasdaq to actually my portfolio more than the S&P 500. But the S&P 500 is normally the given benchmark to try beat. Now, obviously, what has caused the drop? What has caused the uncertainty at the moment? People are unsure. People are unsure, particularly on one thing, and that is inflation. Inflation is the knock-on effect to everything at the moment. It's the knock-on effect to interest rates, or the knock-on effect to uncertainty at the moment. And that's what's creating it, inflation. And you'll see here that inflation started rapidly coming down through October into November, December. So the back end of the year, inflation started dropping rapidly. Everyone got optimistic. Interest rates are going to be coming down by the summer. Inflation has been beaten, and that's why we got a jump up in the stocks. Since that time, inflation started coming rapidly down. What has been the difference? Why have we seen a bit more of a fear and nervousness coming into the market in the last few weeks? It's this. Last time we had an inflation report, it was basically flat. I mean, it dropped 0.1%, and some people are shouting out going, well, it's still dropping. Yes, it's still dropping, but it's not dropping as quick as it was doing. And that's the key thing. And we know the Fed will not pivot until they get this down to 2%. So with that known, we know interest rates are going to still be high and they're not going to pivot. And that's what's holding everyone off, because everyone thought inflation was coming down and it's rapidly coming down, and now it's not. And when you look at the next month in March, the data at the moment is that we were going to go from 6.4 to 6.2. And all the information that has been coming out since then has created uncertainty. All the information that has been coming out is inflation still isn't declining rapidly. And because this is the latest data that the Fed have, every time we've had a Fed someone from the Fed being interviewed, if we have a Fed meeting, if we have the Fed minutes, because this is what we're all going off, everyone's uncertain, and even the Fed are coming out going, well, it's not coming down as what we hoped, and that all that fear has been built up now that people are thinking we aren't going to be coming down that rapidly on inflation, and the interest rates are going to come down. And that's getting priced in now. So for example, as you can see here, you'll see here that investors are still assigning a nearly 70% probability for a double hike, 50 basis points. And that is what's getting priced in now. This wasn't getting priced in. People were not pricing in a double hike of 50 basis points. That is not what was getting priced in. And someone said to me a while ago, oh, even if they went up for a 50 basis points hike, we're still going to rally up on the stock market. And I was like, no, the market is not pricing this in, and that will cause uncertainty. And that is what's getting priced in now, and that is what's causing the dip in the market. Now, obviously, the Fed can shock everyone and actually not do this, and that would inflation comes in lower than expected. The Fed could potentially not do what everyone is expecting and actually do a 25 basis points hike. And there's still things that could potentially change how quickly the market can change rapidly. We talked about this not too long ago. The market, only a few months ago, people, if you get from this point here, people saying, oh, that's it now, that's the market rally done. It's like, no, very quickly this can change, and boom, that's how quickly it can change. And now everyone's thinking, oh, the market's going down. No, it's not 100%. Very quickly information can change, and let's say the Fed don't do what's expected, or inflation comes down lower than what was expected, boom, we've very quickly moved to the other side. So this is why it's very hard to predict what's going to happen in the short term. And that's why no one can predict where the market's going to go. So anyone that's claiming there's going to be a crash, don't listen to them, because they don't know there's going to be a crash. We don't know what the next key bits of data are. But this is why everyone's kind of on hold. Everyone's a bit unsure where the inflation is. Everyone's going to be unsure where the actual interest rate hikes are going to be coming in. Are the 30% that are pointing to a quarter point hike going to be correct? We'll see what happens. So all this uncertainty, and then there's recently what's been added onto this list was a lot of the Silicon Valley Bank. So there's all this uncertainty now. Everyone's looking for something to cling on to. This has been the main story in the last few days, that this is going to collapse, and automatically, because the bank's collapsing, it's been referred to the 08 recession once again. But when you actually look into it here, is that not that major of a deal? And also it's a bank that's more involved in a lot of startup businesses, so you can see why that's not having a good time at the moment. And I can't believe something like this is causing the market to go down. It's causing something like JP Morgan that had a 5% drop yesterday, which was just absolutely crazy sell-off. And that's what happening at the moment. Everyone, because this uncertainty is being created, because this fear has been created, we're getting stuff like this happening at the moment. So yeah, until this uncertainty is more clear, which we'll actually get next week on the 14th, we'll have a lot more idea about where we're actually at, and that will actually more dictate where the market goes. If inflation isn't coming down and then we get the Fed interest rate hikes at 50 basis points, then we will head downwards. But if we very quickly have inflation coming better and interest rate comes in better than what was expected, we can very quickly flick the other direction. So that's what everyone's waiting for. It's just the uncertainty that's being caused at the moment. And it was quite funny to see, because there was the job data that also came out today, which was once again a lot better than what's expected. And same again, this can easily be manipulated into whatever the market sentiment is. You come in with good job data, and if it's a bullish market, everyone goes, oh look, the economy's still holding up, whatever the Fed's doing, and we're not going to have a recession. If we're in a negative market, you'll see very quickly people spin that into the direction of, oh no, Fed data is, the job data is still strong. The Fed aren't going to like that. They want the economy to weaken a bit more, so they're going to increase interest rates. And it's funny how a new story like that can very easily, depending on what the sentiment is, could be spun into both directions if it's positive news or bad news. So, it's same if the job data came in weak. People will be saying, oh, the economy's weakening now, we're going to have a really bad recession. Or if it came in weak, even we're more in a positive sentiment, all of a sudden people can spin that into a direction of, oh, the job data is weak, so the Fed might pivot a lot earlier, and that's the end of the interest rates. So it's funny how it all works, and there's all this short-term noise that is kind of created from these situations, and it's just, ignore it. If you're a long-term investor, you just ignore all this noise that's created in the short term. And really, as a long-term investor, what it means here is that there's two situations, right? If you're a long-term investor right now, you've had a few weeks ago, the bargains were starting to go a little bit. I think I said on this YouTube channel, like, I'm a little bit annoyed because Google's gone up a little bit, PayPal's gone up a little bit. There's not the stocks that I want to buy at what I was buying them at, which was a bit frustrating. So, as a long-term investor, if it is the, overblown fear and we do move back into positive direction, you go, you know what, I took advantage of the dip, I make money from the dip. Fair enough. If it is a situation where we do hit a situation where inflation has stopped coming down and the Fed carry on increasing interest rates, the market goes back to negative, then you know what you've got? You've got even longer to buy them opportunities back at very good valuations, which we would all not mind, especially when we've been on a rally here and someone like myself has obviously trimmed 2 positions for over 100% profit, and in fact there's a third position I've sold out of completely. This is the first time for nearly well over a year that I've actually had a cash reserve, a cash balance to actually buy things. So for me, as long as the investor, if it goes down, hey, you know what, I've actually got a little bit of cash finally on the sidelines to go buy things. So as a long-term investor, you're only a winner either way. So you just sit back and go, you know what, if the market wants to go lower, if people are, taking on this fear, if the shorts are jumping all over it and will go lower, you win long-term. If it goes up, hey, you know what, as long as you've been buying some of the opportunities, you're still going to be in an okay position. And as long-term investors, there's a lot of noise out there which you just kind of have to switch off from and ignore the short-term noise and think about long-term, and you'll be okay whatever comes out of the situation, if this fear is continued or if it was all overblown, which can easily happen. So we'll see what happens there. So we'll have a better idea next week anyway. Hope you enjoyed the video anyway, guys, and catch you in a bit.